AI's next big short squeeze, identifying the sector's most vulnerable stocks. As artificial intelligence continues to dominate market narratives, a growing disconnect is emerging between long term AI optimism and short term market positioning. While capital keeps flowing into AI infrastructure, data centers, and software platforms, several AI linked stocks remain heavily shorted, setting the stage for potential short squeezes if sentiment flips or catalysts land. Short squeezes typically form where three forces collide: elevated short interest, limited float or tight liquidity, and a sudden positive catalyst. In the AI sector, that catalyst could be stronger than expected earnings, new hyperscaler contracts, strategic partnerships, or confirmation that AI demand is translating into real cash flow rather than just capex headlines. Some of the most vulnerable names tend to sit in the in between zone of the AI trade, companies that are no longer speculative startups but not yet consistently profitable. These firms often carry heavy debt, aggressive expansion plans, or recent dilution, which attract short sellers. However, if execution improves, even modestly, positioning can unwind fast. Key pressure points investors are watching include AI infrastructure and data center plays where utilization rates or contract announcements exceed expectations. AI software and services firms showing accelerating ARR growth or early profitability. And semiconductor and compute adjacent names benefiting from second derivative AI demand rather than headline GPU sales. What makes the current setup especially combustible is the crowded nature of bearish bets. Many shorts are based on similar macro assumptions: higher rates, delayed enterprise AI spending, and margin compression. A single upside surprise, such as improved guidance, refinancing on better terms, or a major customer win, can force rapid covering, driving sharp, nonlinear price moves. That said, not every heavily shorted AI stock is a squeeze candidate. Balance sheet health, insider behavior, and the ability to convert AI hype into recurring revenue remain critical filters. The most explosive squeezes tend to occur when pessimism peaks just as fundamentals quietly turn. In a market still hungry for the next NVIDIA, the AI sector's most vulnerable shorts may not be the biggest names, but the overlooked, heavily debated stocks where expectations are low and positioning is stretched.
So a typical or some heavily shorted AI stocks will be the following. Let's just have a look at them. I think the biggest of them all will be Wolf Speed. Short interest we have noticed is almost 100%. And one might ask, is that possible? Yeah, 100%. Yeah, I think what happens is what happens is that, yeah, you can see here, shares floated is 5.9. Yeah, 5.9 million. I think it has a low float, yes. Yeah. So what happens is that people who short, they go on and lend what is shorted out as well. That's how it happens like this. Yeah, the next will be, let's see, MVTS. MVTS, it's coming up. MVTS 30.48%. So the last will be, these are just there are a whole lot of them. AAOI. Yeah, of course there are a whole lot of them. It's not only these three. Just these are just the three we have just selected. A double AOI. Let's see what we have. Yeah, 22.33%. Okay, so yeah, thank you very much for watching this video.